Hey guys, so real estate investment trusts, also known as REITs, are companies that own a large portfolio of real estate and then they distribute the rent that they get from these properties to the shareholders in the form of a dividend. And real estate investment trusts can be a great way for people to gain exposure to real estate in the form of a stock, even if they can't afford to actually buy a property outright on their own. And different REITs do pay a different dividend yield per REIT that you own. But I thought in today's video I'd take a look at a few REITs that do pay quite a high dividend yield, because it is always a good thing to have good cash flow coming in every month or every quarter. And by owning some high dividend stocks, whether those are REITs or just normal stocks, it is a great way to earn passive income, especially if the stock market is going down, which some people believe could be the case in the medium term. Some people do believe that the market is a little bit overvalued right now, but I do think that it is a good idea to have some cash flow coming in the form of dividend stocks, because that means that even if the market is going down, then it gives you some cash flow coming in to reinvest that dividend and to buy stocks as they are going down. So I hope you do enjoy these picks that I've got today. If you do enjoy the video, I'd really appreciate it if you left a like on the video, as that does help out the channel a lot. Also be sure to subscribe if you'd like to see more videos similar to this in the future, including more videos on REITs and dividend stocks. But apart from that guys, let's get right into it. So the first REIT I've got here today is called WP Carey with the ticker symbol WPC. So WP Carey is a REIT that have a diversified portfolio of corporate real estate across a range of tenant industries, property types and geographies. They do invest in high quality single tenant industrial, warehouse, office, retail and self-storage properties that are subject to long-term net leases with built-in rent escalators. WP Carey have an impressive portfolio of diversified real estate, and they do own 1,261 net lease properties that are bringing in $1.2 billion in rent every single year. And this does include 351 total tenants occupying these buildings and an occupancy rate of 98.3% as of right now. It's also worth noting that 62% of their real estate is located in the US, with 36% being in Europe and the remaining being in the rest of the world. So this does mean that they are not solely relying on the US for their rental income. It does also show that their portfolio is quite diversified, and even though the pandemic has negatively impacted some businesses, because they have a lot of tenants across a diverse range of sectors, they can still maintain a very high occupancy rate of over 98%. They currently pay an attractive dividend yield of around 5.5%, which is higher than a lot of other REITs in terms of the yield that the dividend pays, and also higher than a lot of other dividend stocks too. On the downside though, the dividend growth rate is not particularly impressive, currently sitting on a 5-year growth rate of just 1.57%. So in this case, investors are sacrificing future dividend growth for a higher starting yield, which can be good depending on the investing preference that you do have. So with the low dividend growth rate, WP Carey may not be the best investment for young investors who are looking for aggressive dividend growth, as that is really lacking with the WP Carey stock. However, for those that are looking to increase their cash flow every single quarter, then this could be a good choice with the high dividend yield that they do pay out. Especially for those that are looking to retire soon, WP Carey could be a great way to gain a broad exposure to real estate while also generating a great yield. The stock is also down from the pre-pandemic peak price level, and at the moment the deficit is around 20% from the peak stock price. So this definitely suggests that there is a potential for the stock to recover back to where it was before, and therefore you could get some good price appreciation with this stock potentially. So next up we have Omega Healthcare Investors with the ticker symbol OHI. So Omega Healthcare Investors is a healthcare REIT who invest in real estate that is used for skilled nursing facilities and assisted living facilities. This can include independent living or assisted living facilities for the elderly, memory care centres, rehab facilities, long-term care hospitals, as well as regular hospitals as well. They do own 954 properties across mainly the US, but also the UK as well, and have 70 operators across all of their properties. Only 4.1% of their rent does come from the UK, with the rest coming from the US, and Florida is the largest rent income state at 16.1%. So if you're looking for a globally diversified REIT, then Omega may not be the best option for you, because they are heavily relying on the US for their rent. But even so, they have successfully collected over 99% of their rent for the first quarter of 2021. However, recently 2 of their operators, which total 3.2% of the Q3 2021 rent income, did recently express that they could have difficulties paying their rent in the future. So assuming that they do fail to pay on this, then this would drop down their total rent collected to around 96%. So it's still a fairly decent collection rate, but that's just something to bear in mind. Now, the supply of new care facilities is limited due to regulations and building restrictions, meaning that certified facilities and beds have remained steady for many years, with no net new supply. At the same time, the US has a growing aging population, with the amount of people aged 65 or over estimated to increase from 56.1 million in 2020 to 80.8 million in 2040. And this is an increase from 17% of the US population to a predicted 22% of the US population. So based on this information, it is therefore quite clear that the supply is relatively static and not increasing due to the regulations around building new facilities, but the demand is likely to continue to increase every year, putting the healthcare business and therefore Omega Healthcare in a good position for the future. So one of the main reasons why Omega Healthcare is an attractive investment is because of the massive 7.4% dividend yield, making it a fantastic stock to own for cash flow. You would definitely have a hard time finding many other stocks that are out there on the stock market that are as stable and reliable as Omega Healthcare, while also having a dividend yield as big as this. They also have a 5-year dividend growth rate of 3.5%, which is obviously not the best, but it's understandable given that the dividend yield at the moment is so high. Now, as mentioned before, Omega Healthcare is not a particularly diversified REIT because it's all healthcare buildings and it is mainly in the US. However, it does offer a fantastic dividend yield that is hard to match by any other stock. So it's therefore a great option, in my opinion, for those looking to increase their cash flow every year, especially those that are looking to retire as well. Similarly to WP Carey, the stock is down by 17% compared to the peak price before the pandemic. So there is again potential for stock price appreciation with Omega as well. So then the final REIT that I'm going to be looking at today is called Vici Properties with the ticker symbol VICI. So Vici Properties is a REIT that owns a large portfolio of market-leading gaming, hospitality and entertainment destinations, including premium Las Vegas real estate buildings like Caesars Palace and the Venetian. In total, Vici own 28 properties, which includes over 2.2 million square foot of casinos, 25,000 hotel rooms and 39,000 gaming units. And some of the main partners and building operators include Caesars Entertainment, Penn National Gaming and Hard Rock. So currently 42% of their rent does come from the real estate in Las Vegas, with the remaining 58% coming from elsewhere in the US. But despite the pandemic hitting the indoor gaming sector quite hard, Vici did still manage to collect 100% of their rent on time during the pandemic period, which does suggest that they have reliable and high quality tenants in their buildings right now. So the gaming and experience sector is one that has started to already experience a post-pandemic bounce now that the lockdown in the US has started to ease and people are able to experience indoor entertainment once again. Despite this though, there are still a lot of people who do not feel comfortable going inside a casino just yet, and also global travel is still very limited, so there is a lot of other people overseas who would like to travel and have fun in places like Las Vegas, but they can't do it at the moment. So I believe that there's therefore quite a lot of pent-up demand still to come for indoor gaming entertainment in places like Vegas, which does set up Vici Properties for potentially a very strong back end of 2021 going into 2022. They do also pay a pretty good dividend yield of 4.3% right now, which makes them a good stock to hold for cash flow. They did only start paying a dividend in 2018, so it is hard to calculate their dividend growth just yet. However, their first dividend payment in Q1 of 2018 was 16 cents per share, whereas their most recent dividend payout was 33 cents per share, which does show quite strong growth so far. So that is all for today's video, guys. I really do believe that real estate is a great asset to own, and a lot of people out there can't afford to actually buy their own property by sort of putting down a mortgage and then renting it out, because it does require a lot of capital to actually do that. But real estate investment trusts, I personally believe, are a great way to actually gain real estate exposure, even with a very small amount of money, because you can just buy a small amount of a stock, and you are gaining that exposure to real estate, and you're receiving the rent from that building or from that portfolio of buildings in the form of a dividend. But if you did enjoy the video, I'd really appreciate it if you left a like, as that does help out the channel a lot. Also, be sure to subscribe if you'd like to see more videos similar to this in the future. Be sure to also drop me a comment, let me know what your favourite REIT is from today's video. Also let me know what you think of REITs in general, whether you are a fan of them or not. And apart from that, guys, thanks a lot for watching.